looking to raise about 150 billion naira for existing shareholders. The offer, of course, is structured as one new share for every 6 ordinary shares held as of October the 18th. In a statement issued over the weekend in Lagos, the FBN Holdings chair, the strong man of the capital markets, Mr. Femi Otedola, explained that the initiative aims to recapitalize its commercial banking arm at First Bank of Nigeria Limited. And speaking of which, look at FBN Holdings' performance over the last 9 months. Total assets, they're heading towards 30 trillion naira, 27 right now. Interest income, 1.6 trillion. That's the difference, of course, between the interest paid on savings accounts and the likes, and also interest earned on loans. Profits up 125%, 526 billion naira. The stock price as of Friday, we'll see where it closes today. Trading has begun up 10.5% year to date. We're back to taxes. We're talking about Rachel Reeves a moment ago. Let's get to Nigeria now. Looking at the journey of tax reform, President Bola Tinubu has rejected the National Economic Council's proposal to withdraw the tax reform bill, insisting that the council should follow the legislative process. In a statement on Friday, his spokesman Bayo Onaniga said the president emphasized that any input from the council should be incorporated during the public meeting. According to the president, the bill has already been submitted to the National Assembly, and any revisions should be handled through the legislative branch of the government. Take a look at some of the highlights of that bill. We're going to be talking about that with our guest. Increase in VAT. That line doesn't do it justice. That VAT thing is so complicated. Certain supplies are excluded from VAT. You've got the company income tax down to 27.5%. They're going to try to move it to 25% by 2026. And there's a development levy for education, 4% by 2026. Could go down to 2% by 2030. And then you've got the lottery and gaming tax, and also telcos. The telcos don't really like that one. Joining us to discuss further, Abiodun Kayode-Alli, economist and tax senior manager at PwC. Abiodun, it's good to see you again. Thank you so much for joining us. What do you make of the opposition to this bill, the pushback?
Well, I can understand the concerns that most of the governors have, those on the National Economic Council, and I think the major concern is actually on the value-added tax, right? Because here we are looking at how those revenues will be distributed, right? But like the president said, at the National Assembly, right, the lawmakers, there are processes through which that bill will eventually be passed. They're going to set up a committee, and that committee is still going to request for stakeholder consultation. So I think it's okay for the committee to actually do their work, get inputs, and eventually report back to the National Assembly. At the end of the day, it's not all processes are perfect, right? So the idea is to arrive at a consensus, and before you arrive at a consensus, it's expected there will be disagreements, right, at one point or the other. But at the end of the day, it's all for a better good for everyone. Yeah.
As far as the pushback from the president saying, nope, I'm not going to withdraw it, let it go through the legislative process. Looking at Nigeria's revenue concerns, we've talked about this with you on the show before. Do you understand where the president is coming from on his parts?
Yeah, so generally, because the committee itself, actually, when they started back August 2023, they had done lots of stakeholder engagement, right? They had had conversations with the media, with journalists, with businesses, even with those in diaspora, right? To the disabled, they've had lots of conversations, even with the National Assembly, right? So I think what the president is actually interested in right now is to see how much we can make progress rather than all these short bumps that we have. So I think if you look at it from that perspective, I think the president just wants to make progress. Yeah.
Gotcha. Speaking of progress, we've got some highlights of the bill. I don't do it justice. I don't know where we begin. What do you make of, I guess, the increase in VAT, but then there are certain supplies excluded from VAT. Is that supposed to provide some relief? What do you make of that part?
Yes. So VAT, actually, it has to do with the tax you pay at each stage of production, right, or each stage of supply of the service, right? So if you consider the fact that the VAT system we're currently adopting is not really a proper VAT system, right? Because there are some things that you can't claim and impute VAT on. So the way it's meant to work is that for each stage of production, there is a VAT involved, right? Then the producer can recoup any VAT he has incurred, right? Such that it reduces his costs, right? Currently, our laws restrict it to only goods. So if you're offering a service, you can't recoup your cost as a producer. So if you look at part of the objectives of the committee, what they want to do is to ensure that there is facilitation of economic growth, right? Where businesses, just to improve the ease of doing business, right? Make producers more profitable. So as they grow their profits, they can employ more people and pay more taxes, right? So the revamping allowing you to actually recognize input VAT on services will go a long way in helping us. That's number one. Then most of the items that are now going to be excluded. So I'm trying not to be too technical.
I know. I admire you accountants, man. That thing is... Whoo!
Yeah, I'm trying not to be too technical. We have some categories of items that will be called exempt from VAT, and we have some categories of items that will be called zero rated. So most of those, the difference between this exempt and zero rated is that if an item is exempt, you as a producer, you can't claim an input if it's exempt. But if it's zero rated, you can claim an input. So most of the items that the average person will typically consume, they've now been moved from exempt to zero rated. So it allows the producers to be able to claim input, and it kind of reduces the cost. Right? So basic food items are now zero rated. You have things like medical, right? Medical services, those also are zero rated. And education, right? Tuition, primary, secondary, tertiary, even the materials, right? Educational materials, they are also zero rated. Then you also have the transcos, the GenCos, the services that they perform, right, with respect to electricity. So a lot of these items have now been moved to zero rated, which is good in the ultimate, in the long run. Then for, is it CIT?
Yeah, the company income tax, they're coming down.
Yes, and to be honest, it makes a lot of sense. So even if you consider the impact of VAT, majority of the people who will be paying VAT are people who can afford to, right? Things like if you enter a public transport, right? Because it's a public transport, you won't pay VAT on it, right? But if you are taking something like an Uber, right, which is like a private one, you will pay VAT on that if you are taking like an Uber, something like that, right? So because of the increase in the VAT, you are now bringing the CIT downwards. So that makes a lot of sense. Then if I speak to
very quickly
the development levy, so the development levy, I think all businesses, if they see this, they will actually applaud the committee, because right now we have lots of levies that companies pay. You have what they call the National Science and Engineering Levy, NASENI for short. You have what they call the National Information Technology Development Levy, which banks and telecom companies pay. Lots of levies all over the places. So what this development levy is doing is consolidating it into one single levy. Brilliant. So no more NASENI, no more TET, no more education tax that they pay, all those things. No more. Just one single levy that will be paid, and it's will be coming down gradually.
We're out of time, but real quick, just as quickly as you can, the gaming tax and then the telcos, I don't think the telcos will like that 5% tax, but what do you make of those two real quick?
Well, one thing they've done is to remove some of the existing levies that are being paid by the lottery and gaming businesses. They are replacing it, and the excise tax on the telcos. I mean, if you consider the fact that this administration, they suspended what the Buhari administration had introduced. For them bringing it at this point in time, I think to some extent is a bit fair. Abiodun
Kayode-Alli, Economist, tax manager over at PwC, senior manager. You are the man for the job to explain these things. And shout out to Taiwo Yedele. His job is not easy. Of course, he's ex-PwC as well, right? So you guys are the people to break these things down for us. Thank you so much for your time. Brilliant.